Hey everyone, in this video I'm going to discuss Canoo's capital investments to get the business to where it is today and where it's likely to be in 2025. So let's get right into it. In the last 6 months, ended June 30th, Canoo, the cash used in operations for Canoo was 129.5 million. That's the outflow. That was compared to 237.6 million in the same time the prior year. So the amount of cash that's going out decreased significantly. When we look at capital expenditures of 33.9 million for that same time period, that was also down from the 65.4 million for the 6 months ended June 30th last year. So the company's making progress in diminishing or slowing down those cash outflows as it's getting ready to ramp up production. Up until now, Canoo has invested $1.5 billion into the company, into building it to where it is today. That's a lot of money to put out and barely have insignificant deliveries of vehicles. Now there's more coming, and I'll talk a little bit more about that in a little bit, but that's a lot of investment to have poured into a company with little to show for it thus far. And their strategy is with the sole focus to deliver double-digit return on capital and shareholder return. Double digits. That would be excellent if they are to achieve double-digit shareholder returns, return on investment. So moving on, they maintained the projections to achieve a 40,000 vehicle run rate by 2024. So all the work that's been put in thus far is leading up to this fact that they're going to get to a 40,000 run rate vehicle by 2024 and perhaps build 40,000 vehicles in 2025. When they say run rate, that means their production capacity in the last, it could be in the last week or in the last month, is at an annualized rate of 40,000 vehicles. It doesn't mean that they're going to produce 40,000 vehicles in 2024. It just means they're going to get to a pace by the end of the year that if you were to annualize it, would produce 40,000 vehicles. And that's going to require an incremental capital expenditure of another $90 million to $120 million. So even though they've already invested $1.5 billion, there needs to be more. There needs to be more, at least $90 million to $120 million, according to management, thereby allowing them to target gross profit margin positive in 2025 based on their current pricing. Investors would be thrilled if Canoo would produce 40,000 vehicles in 2025 and be gross profit margin, or maybe even just one of those two things, produce 40,000 vehicles in 2025 or to be gross profit margin positive in 2025. I think investors in Canoo stock would be thrilled with that result for 2025. So interesting, $1.5 billion has been invested. Another $90 million needs to be put in, and the company's targeting gross profit margin positive by 2025. All right, but that's it for this brief video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.